Hello and welcome to another episode of FinTech Focus TV with me, Toby. Today we have a very, very interesting conversation coming your way, and I'm delighted to introduce you to Colm Furlong over in Hong Kong. How are you?
Yeah, great, Toby, and fantastic to be with you again. I'm a big fan of FinTech Focus TV, so it's kind of strange for me to be on it now, but very good to be with you. I appreciate
we've been excited about this for some time, and I'm joined again by a long-term friend of the show and many times star. It's Mr. Steve Grob. Steve, how are you?
Yeah, all good. Thank you, Toby, and great to be back on the show.
Lovely. Listen, there's loads to unpack at the moment. Before we do that, let's just reintroduce ourselves. Steve, tell us a little bit about yourself and Vision 57.
So I'm Steve Grob. I set up Vision 57 a couple of years back now as a pathfinder company to try and help the firms that I thought were going to shape capital markets over the next 5 to 8 years with their business strategy. And I have a small portfolio of firms. Some I've invested in, but I work for all of them, just helping them shape what they do and get there faster, basically.
Fantastic. And Colm, tell us a little bit about yourself and OSL.
Hi, Toby. I'm Colm Furlong. I'm the head of SaaS at OSL, Asia's leading digital asset platform.
Fantastic. Look, really excited to have you on there. Steve, you just mentioned then about the sort of portfolio of companies you're really interested in, and I know you've been massively excited about OSL. Tell us about how you came across them and why you think it's so interesting.
I mean, it's a really interesting backstory because Colm and I worked together at Fidessa, and when the blockchain Bitcoin thing first emerged, I know 2010, I have to admit I was hugely cynical about the whole thing, as were quite a few of my colleagues. Like all sort of converts, I've become a bit of a zealot now with the whole thing. And the simple fact is that just because I can't understand why Bitcoin is a store of value rather than a mechanism to transfer value, that just doesn't matter, because crypto and digital assets are part of them, or fast becoming part of the mainstream. And what that means is that the world of TradFi, which I grew up in, and the DeFi worlds are on collision course, because crypto and digital assets are going to become just another asset class together with equities, bonds, FX, commodities. And so as that happens, you're going to see in one direction the DeFi world, which we're going to be talking about, slicker technology, have to come into play in the traditional trading world. And at the same time, all the regulatory constructs that have been imposed on the TradFi world are going to swim the other way into the DeFi world. And when Colm joined OSL, we obviously stayed in touch. And what's so interesting about them to me is they're right in the crosshairs of that, of being a combination of traditional capital market specialists and next generation crypto experts. And I think that's absolutely the right place for firms to be.
I absolutely agree. I think it's something which we're hearing day after day at the moment, and it's a growing sort of noise that we're hearing about it. And it just makes it's just such a fascinating space, as you say, isn't it? I remember doing events a while ago and hearing about people sort of dismissing that. We saw that traditional finance world dismissing it as the effectively money laundering technology, etc. that was coming in there, and then all of a sudden, a couple of years later, it's you said becoming an asset class. I think it's it pretty much is an asset class right now. And
I mean, you can see
I'm such an interesting future.
You can see I'm such a convert because I'm in blockchain black now rather than my normal collared shirt. So.
Yes, it suits you. It suits you. So, Colm, listen. It's as you say, as you said there, it's a really, really interesting space. Tell us about OSL, where they came from, how it works, what you're doing there, and your piece of the business. It's really interesting, right?
Sure. Yeah. So I'd be delighted to. So I suppose the one thing, being as Steve said, being like a refugee from traditional markets technology, I'm fairly new to the game. When you consider that actually digital assets and crypto has quite a history now. It's been going for a decade. So And OSL has been part of that, the history of that ecosystem. It's a very interesting company and very unique in a way, because it started, the company was actually founded in 2018 as OSL. So it's been going for 4 to 5 years now. But prior to that, there was other iterations of the business, which was related to crypto exchange, Bitcoin exchange. We established one of the world's biggest OTC desks in crypto in Hong Kong before that. But the company established itself as OSL in 2018. It was a very pivotal point for the founders of the company, who actually as well came from traditional finance background, but very early on, you know, and their vision was to create a business that was regulatory ready, you know, ready for regulation that they believed was inevitable. And I think that might sound obvious now as we sit here and we all contemplate, you know, the big names coming into the space. But I don't think it was like that then, even though it feels like quite a short time ago for old guys like us, you know. But to make a decision to turn your back on the millions and billions of dollars that have been churning around in the let's call it the non-regulated crypto world, you know, and we see examples of that, of those businesses today who are now struggling with, you know, regulation. OSL's decision was based around being ready for where the puck was going to be, you know, and really how they went about that was to take some principal actions, and those actions were to become a listed company, to become a regulated business, to offer insurance, and to offer very, very high grade, high scale technology that would allow us to be able to support not just our own exchange and our own brokerage, but also to support other businesses in that journey. So we did become a listed business. Our parent company, BC Technology, is listed on the Hong Kong Stock Exchange. And we were one of the, if not the first, digital assets business to be audited by Big Four. So that's put us in very good shape today.
And I guess the other thing, Colm, is the SFC regulatory. I think you're the only Hong Kong.
Yeah. So yeah, that decision to become licensed is critical, really. So the decision was made to follow that path, and OSL became the first licensed virtual asset service provider in Hong Kong, and we remain the only licensed and regulated.
And that's not an easy badge to get, because the SFC, you know, they're amongst the most stringent of regulators. In fact,
no, I think it's probably the most stringent by far. You know, you can easily. I mean, there's a lot of differences in. I'm sure we'll get into this further on, but there's a lot of differences in how different jurisdictions are dealing with it, and some are deliberately light touch, some are heavy touch. And some are like China is a complete ban on crypto, right? So, so yeah, there's differences there, we felt that if you can jump over the highest bar, you should be able to jump over all the lower bars as well, right? So
yeah.
I think it was a very good decision by the business leaders at the time, and we benefit from that today, because when we go out and offer our services to financial institutions around the world, they know that they're dealing with a firm that's actually jumped over those hurdles. You know?
And that security has always been, you know, one of the big obstacles to growth of the sector initially. You know, when you looked at it and you thought, right, why aren't the institutions and governments moving back into it? It's because it was so unregulated.
I think it still is
that security in the space. Yeah,
I think it still is. I think safety and trust is the key. So, you know, we can't, in fact, it's interesting because you can't grow this industry without the participation of the institutions. And the institutions are naturally risk averse, and also they have a bit to lose. And many of those institutions have made a lot of money, you know, with the structures that are in place in the capital markets today. And you know, if you go at a much more macro level, you know, you can see that, you know, the impact of digital assets and the technology presents a very compelling alternative to the existing structures.
I mean, I think what makes it so fascinating to me is last year, digital exchanges earned 24 billion in trading fees. And that's A, lot of money. B, that's a growth of 7 times from the previous year. And it's actually 60% more than the traditional exchanges earned. So you get a sense of all these brokerages are seeing this huge new thing emerge, and yet they're scared of it. And so, you know, Colm might talk a lot about how you've got this sort of compulsion repulsion thing with it, of they absolutely need to get into it, but they don't know how. And that's, again, part of what I think OSL does really well. I mean, Colm can talk forever about the technology, but they also have the SMEs to help their clients, you know, understand the regulatory frameworks, what's the right business model. So it's you know, they're really able to take the TradFi world into this newer world, which you know is more than just a technology thing, right, Colm?
Yeah, and I think it's important to understand, you know, well, why now, you know, why not 5 years ago as well, and to consider what the environment is like now for that transition. And I think from our perspective, and it's certainly my opinion, that, you know, 2021 was a real banner year. That was the year when it stopped being a joke or a gas, and it started to become something serious. Reflected in the volumes, reflected in the investment that was going in from VCs, reflected in the participation from institutions. At least the forward-thinking institutions were in the game in 21. And we had that, like DBS are one of our customers in Southeast Asia, the biggest bank down there. And they took a very ambitious approach to getting involved in the sector in partnership with us. And for me, the drivers of why it's actually, you know, changing now is really around probably 3 key factors. One is regulatory clarity, which is coming now. And anywhere where it doesn't exist, it's coming, right? So it's definitely happening. Nobody can deny that the regulators are on top of it. They're giving proper focus and determined energy towards regulating this sector. It's happening. And that provides surety and safety and allows institutions to participate. The other thing, which I think is really important, which is related to our business, is really that the infrastructure is now ready. You know, we have got banks now who are specialists in facilitating fiat to crypto. That was always a sticking point or a treacle in terms of progressing. And now we have specialists like, you know, like Silvergate and Anchorage and those kind of guys who are really just, you know, enabling the infrastructure to actually operate the workflow that's required and the movement of fiat to crypto and vice versa. Then the other things that are in place is there's a dramatic selection of brilliant compliance technologies out there. Now we use most of them. So we buy these technologies to facilitate our own compliance with regulations. We also then resell them as part of the SaaS business. So we'll service and provide those compliance technology platforms. And the sophistication of those is off the scale. So we now have safety, we have regulation, we have banks, we have compliance technologies that can help us. And now you have regulated venues like OSL, and you have custody and key management services, which are trusted and secure and insured. And so you then end up with almost everything you need for acceleration to take place. And I think that's a relatively new situation we find ourselves in. I know trying to buy Bitcoin in various places. I know personal experience trying to get funds out of my bank account to put into a crypto firm and then buy a Bitcoin or buy something. You know, often those transactions were blocked, and the banks deliberately didn't want to get involved and empower their customers, because a lot of the banks saw outflows of funds out of their balance sheets and out of their accounts out to crypto providers. So that's another part of it. And then, the third thing that really does drive it forward, and I'll stop and I'll let Steve speak in a minute, is market demand. It's market demand. So if the market's demanding it, people move forward towards it. And I think that market demand is obvious and present amongst private wealth, amongst family offices, such a wide range of funds and regulated.
I mean, that was exactly what I was going to say, is that all those points Colm makes means that it's sort of institution ready now, institution grade marketplace. And the number, again, I read another survey saying that something like 50% of institutions now have taken a position of some sort or other in digital assets. So
I'm surprised it's only that low, to be fair, as well.
Well, but I mean, the ship has sailed. And now you've got this, sort of history being written of how the TradFi market is going to be completely transformed by the technologies that folks like OSL have. And that for me is a really interesting thing, because again, talking with Colm, it's bloody hard to run a real-time venue, 24/7, availability, doing real-time settlement. All those are really tough technical problems that have been solved, but now they have been solved. Why not apply them to traditional asset classes? And it might be worth me just talking through some of the late nights that you guys have had to make all that work.
Yeah, I think the 24/7 thing is the thing that surprised me the most, and realizing what that meant because we were running, myself and Steve were at Fidessa, and we were running trading systems around the globe on standard market hours. Of course, we were rocking around, the clock, of course, but we were shutting down systems at the end of the day and bouncing them and cleaning them out and starting again the next day. And we had follow the sun support. But if you go into 24/7 crypto, it never stops. So the actual provision of service around 24/7 is extraordinarily challenging, and particularly for a traditional. If you think about the firms that we're all familiar with, in traditional space, I'm talking about brokers and banks and the rest. They may have night desks, or they may be truly global. They may be truly global with offices around the world, but not there's not many truly global financial institutions. If you count them up, they don't exist. A lot of people say they have global businesses, but actually some of them didn't even have night desks, And so you're kind of going, well, how do, even if like a company like OSL provides the technology to run that, even if we run all the tech 24/7 on their behalf, they still have to have people on all the time. And that's very difficult for people who are used to long weekends and bank holidays and Christmas Day and all the rest of it.
It's taking this sort of technology. So, imagine if Google and Amazon were shut at the weekend and you couldn't use them. So you have to take that type of technological approach of I'm available all the time.
All the time, yeah.
And what happens is that then sets the expectation from the marketplace to want to trade all the time. And that's what I mean. I think that's the interesting thing as TradFi assets start to get traded that way, that's going to create some fundamental problems in terms of T0 settlement, fractional ownership, all those things, all those middle and back office systems, billions of dollars have been spent on them. They can't do that. And so there's going to be a huge technological arms race that's going to happen as the world's become, as DeFi and TradFi become Fi, one world. There's going to be an enormous amount of technology that's going to have to be, I don't know whether you think updated or probably replaced, Colm.
I think it's interesting, particularly in the post-trade. It's very different. The front office is not incredibly different from traditional finance, from a brokerage or from a exchange trading. In terms of their matching engines, there's OMSs, there's algos. So that's not wholly different. But post-trade is extremely difficult. Not difficult, different. Difficult for somebody who doesn't know how to do it, because when you're thinking about, I suppose the T+0 issue is key. Achieving T+0 is a technology feat. Just because the blockchain is ready to take the transaction doesn't mean you've got everything in line to achieve that. So if you think about all of the systems that support a traditional brokerage, for example, you think about clearinghouses and all Swift and everything else, right? There's all kinds of things going on in the back of a brokerage, right? In terms of crypto and the facilitation of that, you need really high performance, high quality databases, obviously. You need traditional traditional ledger style technologies, which will record transactions that will then be reconciled with multiple blockchains, and all of the integration points that you need into a bank or into a brokerage are quite significant, because you think if you're providing a new asset class and a new technology platform, which has to be fundamentally different from the traditional platform that's supporting the rest of the asset classes. and then plugging that into general ledger and all of the other things that are in the back office. I think that's the space where you really need proprietary knowledge. And I don't see you can just learn that. You've got to actually work with experts to get that right.
But it's interesting though, because it's a bit of a two-way street. So when I first started to understand with Colm and his team how all this stuff worked, I was amazed at how simple the order types were compared to the sophistication of order types that you have in equities trading, derivatives trading, the algorithms, the smart order routing. All of that stuff doesn't exist yet in the DeFi world, but it will. And so that's why both sides can learn from each other. It's not just there's a bunch of smart guys over here that know it all. They don't, because they don't understand. I mean, you think of the billions spent on smart order routing post MiFID, in Europe. There's some really sophisticated stuff there, and you can imagine a world where this whole concept of best execution, which has been enshrined in European law with MiFID 1, MiFID 2, as the regulations start to take more shape. Why would you not have a best execution obligation for accessing digital assets? And so TCA, yeah, exactly. So TCA, market data analysis, toxic liquidity, all those things are going to have to be learnt by the young kids, which I think which makes it interesting, and hopefully means there's some value that Colm and I can still put into the whole thing.
But it is this fascinating collision, isn't it? And as you guys have been talking, it's fascinating hearing it. But it's a really interesting sort of evolution of the capital markets again. And if you look at it sort of echoes in my mind the sort of mid 2000s of the threat of fintech versus institutions, and then the institutions saying, right, rather than fight this threat, let's adopt it and put it into the business and invest in it and start all the accelerators, etc. It's almost a replication of that in this arena, looking at it and actually saying this is about collaboration rather than disruption as much as anything else. And now utilizing it to say, look, here's a new asset class that's got potentially incredibly more potential than anything we've seen before in other areas, which becomes really, really exciting.
I think we could talk all night about the implications of crypto at the macro level, right? And I think there's enough noise about that anyway, right? But the piece that isn't well discussed is that infrastructure element, that regulatory rigor that's required around the provision of technology, and that because people just take that for granted, right? Because we actually did it really well. The last 2 decades of evolution in traditional markets technology has been the race to zero, has been the high, to the point where algorithm, it didn't really matter what algorithm you were using in the end, because they were all as performant as one another in the end, and that just happened. And it happened because there was hundreds and hundreds of people and hundreds of institutions that were involved in investment to continually build efficiency into the traditional markets. We reached a point where it got a bit boring, and I think now we have to do it all over again with a different dimension, right? And I think that is a fascinating challenge for lots and lots of very, very smart institutions. I think it's very important to recognize the efficiency of the front office that already exists in traditional markets. It's highly sophisticated. And I think now, when we look at the benefits that, the elements that we discussed, 2+0, 24/7, new asset class, managing all of that, that's the challenge. And that's where we get involved, right? So my business is a technology services business, and our job is to provide that sophisticated technology with the benefit of being able to leverage modern technology, and also to be able to leverage, advanced new techniques and technologies that are materializing in front of our eyes, right? As the ecosystem evolves, and fascinating opportunities to be innovative around the tokenization of assets and the trading of those and the distribution of those. And what makes it best for us is, as a business, we see that the customers that we're engaged with, they're typically customers that have already established broad distribution and have high brand value. So we don't find ourselves competing with them. They've got the customers, they just don't have the tech. And so what our role in our SaaS is to empower them. OSL is not going to go after Morgan Stanley's clients in the US or whatever, right? We're not in a position to do that. We don't have a right to win to offer an alternative brokerage. I mean, we have a great brokerage, but that's not really what our game is. In terms of empowering our customers to be successful, is giving them the benefit of all the technology we know that works, right? So they don't have to take any risk.
I think the other thing that I've learned about OSL is the speed with which you can spin up these systems. So again, back in our Fidessa days, when we signed a client, we would measure from client signature to go live, certainly in months, probably quarters, maybe a bit longer than that. And OSL can do this stuff in 6 weeks, which is just lightning fast compared to anything that I ever experienced in my old world. The sort of slightly cliched analogy I use is one where if you were a new country and you're going to put a phone system in, you wouldn't put landlines in. You jump straight to cell phones. So you've got these guys using cell phones coming in, if you like, you're all cell phone-like technology. They're just armed with better kit.
And the other thing, which probably would interest you, Toby, is the talent. The talent that's coming out of the universities and straight into technology, and they're natives. So they're incredibly well-equipped young people coming into an industry, and actually they're attracted to it because it is different and because it does present something more compelling than working for a bank. And I think
this is really interesting part of it, right? Because you're absolutely right. Look, this is there's a generation of people coming through who are very mission and purpose led, and they're looking to do things which are about interesting challenges, game-changing challenges. And what you're talking about here is we've heard evolution and revolution talked about for 2 decades now in financial services. But what you're talking about, but I think I would lean heavily towards the evolution part of it as much as anything else. There's been an increase in technology that I think the last 2 years has accelerated in particular. But this area to me is a complete revolution. It changes the marketplaces. It changes the game in terms of speed of everything you're talking about. And whenever you're looking at tech's use within financial services, you're talking about cost reduction, friction reduction, efficiency gains, and everything you're talking about there, where you are talking about 24/7 and everything in between, is it just gives people what they need to play at a completely different level. And when you're seeing, the institutions recognise that and being able to reach out to talent and bring that that talent in there who are thinking natively about everything which they're doing, combining it as we were talking about before coming on air with the experience necessary in a really complex regulatory industry, it creates something which is just incredibly exciting to think about at the moment, right? And to see companies like OSL at the core of it is really.
I mean, Colm and we were saying before that we have to get sat down every so often and get stuff explained to us, which is really cool because I was saying that I enjoy all the projects I work on, but this one is probably one where I'm learning just as much as I'm contributing, and that makes it really good fun.
And you've got the outfit now as well.
Now I've got the outfit.
Got the guitars. I'm taking this bat down and putting a guitar up there to be really involved. You'll see me in black t-shirts before soon.
I think the industry has started to pivot towards Steve's wardrobe. I think that's but also, I think just another point I wanted to raise, just that we touched on it there, because I love going into the macro. I love to try and think about, well, what does it actually mean? And I think when you mentioned there that it reminded you of other things you've experienced in the past, Toby, and for me, crypto, crypto's been around a long time. Photography's been around a long time. I used to work for a crypto photography business 2 decades ago, right? So that's been around. The application of crypto to the creation of money or assets or wherever else we decide to build with it in the world, that to me represents it like a completely new layer of technology. And it actually feels more to me like the internet. And I know it probably sounds quite jingoistic, but it does feel like the internet, you know, late 90s. We had a lot of chaos, a lot of good companies came out, you know, were invented, and we had a lot of change and a lot of people who weren't willing to accept the internet in the world of capital markets. And I remember being in the rooms in those days where we were using proprietary comms, and then saying, well, why don't we use the internet? And you just go, well, when we just can't, it's not safe, it's not secure, and somebody will hack it.
Takes ages to load up.
Yeah, well, actually, it's true. But so once we had broadband, which is another example of a you know a new layer of technology. Now we had mobile, which is another layer of technology. All of these things have kind of changed banking and the way we live forever. And I'm quite sure that this technology that has been that's come out of Bitcoin and will be developed in many different ways as we move into the future. I think we're only at the start. Will be present in everybody's life, you know, and that's quite a big statement. What do you mean? But actually, it'll be on your phone. You'll be using it to transact in some form in the future, whether you're a participant or not. It's not optional, and therefore it's not actually optional for banks to opt out. They have to get involved.
And just on that point, one question I was thinking, just listening to you, Colm, is, you know, when you engage with clients the first time, what are some of the, I don't know, not fear factors, but the sort of more nervous questions they need to be reassured about, that either technically or operationally that you know they'll ask you?
So when our clients, when we're going direct to the customer, so where our clients are using, you know, we're operating as a broker, let's say a receiving broker, we're taking care of all of the compliance end of it, the security side of it, and all of that, and we're regulated. So obviously there's a lot of assurance that everything's, you know, there's a lot less concern. It's when they have to take responsibility for their own compliance, right? That's when it gets interesting. And yes, we have all the tools they need, and we source these. We take the best tools in the market and we provide them as a single service. But we do have to go through a significant period of time through training and exercises around what we do and how we satisfy the SFC and our auditors, so that they can replicate those behaviors and that level of hygiene. And so it is compliant, it is security, data security critical, and obviously that's an issue for everyone. You know, if you're securing your perimeters, that you have the right operational standards around security. Ultimately, and I think it's always fascinating to consider when you're not that into how you do all that, is the fact that we are protecting and securing very, very expensive pieces of software, you know. And so if you think about the price of a Bitcoin, you know, it was around 40,000 US at the moment. I don't want to have that on my mobile phone, you know. I want to have that somewhere safe. And so they're the things we spend the most time on. In terms of the provision of technology, I think it's understanding how, particularly, as I said, post-trade is managed. And we still have the classic challenges of integration to a bank, which is never easy, no matter what you're trying to integrate. So, but standardized APIs are critical. So API is probably the single most important enabler to bring those two worlds together. Obviously, you need to. There was one thing, like, because you're familiar with FIX in the traditional markets, right? FIX is everywhere. Everybody talks to each other in FIX, and there's Fidessa network and all the other big networks that support FIX. But most of the what we would call traditional crypto players, the big exchanges, you know, I won't name them, but you know what they are. Most of them don't support FIX, and so they're not equipped to even connect into the
that I think is just crucial as the world's come together. That, you know, FIX is this ubiquitous standard in the TradFi world, and, you know, OSL were really quick to recognize that if they wanted to offer crypto to those participants, they'd have to use some of the same standards. So OSL, I can't remember whether you actually are or about to a part of the FIX protocol group. and will be contributing to the growth of Fix in that direction. So there's all these sorts of things that make that bridge simpler and easier. So if Colm's talking to one of his clients and says Fix, they go, oh, I actually know what that is. So I can they can latch on to. So all I have to do is get a Fix order in from my client and then route it onto you, and you do the rest. That suddenly sounds like a much simpler operation than saying there's some newfangled API that we've just invented, or standard rather, for messaging. So I think
Fix are running towards that as well, aren't they? We've seen a lot of their messaging at the moment. They're hosting webinars, and they're aggressively moving and actively moving into that whole space, which I think is really interesting. There's been a lot of comms that have come through from FPL to me recently, talking about that, and webinars coming up and new launches, which I think is a really progressive step, actually. And when we talk about that and we look at that sort of, you guys have talked about the sort of journeys you've been on of discovery and learning, recently, and it does feel like the traditional markets are learning a lot from the world of crypto. And I know that's a double-edged, that works both ways. What would you say some of the biggest lessons that the traditional markets can learn from the world of crypto?
Oh, well, I mean, there's a lot of lessons to be learned. I'm not sure many of them want to learn them, but
but they have to, right? That's the thing. It's something there which they recognise.
They absolutely do. I think, as I said, the key elements that they're going to have to master is the instant settlement and 24/7 elements. I think they're probably the biggest challenges for them to overcome. Now, that sounds quite easy, but I think the post-trade is particularly challenging.
And that will be, I think Colm said right, because that will be reinforced not just by the fact that because the DeFi world is setting a completely new standard for instant settlement and stuff, but that's what the regulators want too. So there's been this continual regulatory push to reduce settlement times, because that period between thinking you've bought something and knowing you've bought something is the high risk point in the industry. And so regulators will, I think, when they get their heads around it, will say, actually, these crypto folks can really help us get the whole industry in a much, much bizarrely or slightly counterintuitively safer place. And I think that's the big lesson that probably they'll learn, is that a lot of this stuff is actually for the good of the whole industry.
I think the regulators, I think regulation is brilliant for this, right? I mean, I think most people realize that if we apply regulation to the industry, it's going to be beneficial for everyone. And I think the regulators have stated, and they've been very, I can't talk for all of them, but certainly the messaging that we've seen, and also some of the statements from Financial Action Task Force as well, around developing a safe environment where investors are protected and where innovation can flourish. Now, who doesn't want that? We all want that. And then the other side of it is, how can we avoid? One of probably the first steps on the FATF journey was going after illicit finance and money laundering and terrorist financing and all of those kind of things, which I think there was a lot of hype around the fact that a lot of the bad players or bad actors were using crypto to facilitate themselves. And of course they are at some level, but certainly nowhere close to what they're doing in cash, right? So, and this is just a fact, this isn't an opinion, right?
I was going to say that, I mean, the traditional banks and stuff don't exactly have the best record necessarily in that. So you're right, and I think that coming together is going to be really, really cool.
So with those two worlds colliding, it creates massive opportunities for improvement and a better industry. This isn't something which we've discussed before, but what does the future look like within that? How does it work to see this inevitable merger of traditional finance, decentralized finance coming together? Why does that create a better world? How does it create a better world?
The way I see it from a technical perspective is the idea of, because one of the other things I've learned is the language of TradFi doesn't always work very well in the DeFi world. The traditional buy side, sell side venue route is all collapsed together in many cases. But what you're seeing in traditional financial worlds are that people are moving away from sort of tunnel OMSs that handle one asset class. And I've got one here, one here, one here, one here. And they're replacing it with a platform that does their inputs, i.e. getting flowing from customers, their outputs, which is sending them to pools of liquidity, whether that's exchanges, dark pools, HFT providers, what have you. And then it's, it is the API, economy coming into capital markets and workflow modules on top of it. And when you look at the industry that way, you can see a much easier glide path for the two things to come together. In terms of what does it mean for the betterment of the world, I think I'm going to pass on that one and let Colm as the evangelist try and answer that one.
I'll go into the micro first then, and if we look at what we're talking about predominantly is the the system and stacks of technology that exist today to support traditional finance, right? So with respect to that stack is now collapsed. So in our end-to-end technology offering, we provide distribution, mobile-ready technology, we provide exchanges, we provide back office settlement, operations consoles, and nodes to the blockchain, right? So that's just a much more efficient, all in one single service, right? So that's like an entire financial ecosystem in a box almost.
Yeah.
When it comes to the macro, where does all of this take us? Well, I think efficiency, as we discussed, efficiency will lead to obviously lower costs in the longer term. So we're going to have a much more highly efficient, cost-effective capital market down the line, 5-10 years, whatever it takes, but it's going to happen. And I think the other observation is that we are clearly only at the beginning. So when you're at the start of something, not only is it very hard to tell where you're going to be in 10 years' time, but it's also a very fragile time. When you have a new technology and you have change in the ecosystem, I think, and that's why we see that reflected in the volatility of some of the leading crypto coins and tokens. I think it's a very difficult time for a technology to establish itself. And I think what happens then is naturally what we've seen in the longer term is massive consolidation. So there won't be 400 exchanges in 5-10 years time, which there is today for trading a Bitcoin. That's just it's not sustainable, right? And we won't need, smart order routers that are bouncing between all of these venues and expensive connectivity to them. So I think consolidation is inevitable, just like it has been in the traditional fintech space. I think, as I said before, the broad adoption of fintech into our lives, which is not an opt-out scenario. Absolutely. So I think it's inevitable that all banks will need to be able, and brokers and everybody will need to be able to store digital assets. That's for sure. Because that's going to be your livelihood and the democratization of finance and all of those things. I think they're very positive objectives.
I think, my final thought on it, Toby, is that, when I got into this industry, however many years ago it was, my first observation as a technician was, why is it so complicated? I've always why is it just so hard to buy something and sell something? And I think, the benefit of all of this that we've been talking about is we're going to have, as Colm says, more efficient. It's just going to be simpler, and simpler has to be better. It's easier to regulate, it's easier to manage, it's easier to understand. And I think that's what, at the end of the day, that's the big picture thing for me that we end up with.
Yeah, I love that. Colm, I'm going to finish with you and ask you a simple question. That OSL are clearly doing some groundbreaking things at the moment, some really exciting things. Who should be reaching out to speak to you at the moment? I know there's going to be people watching this who are, just from the rhetoric I have all the time, this is a conversation that's happening more and more and more at the moment. You're at the heart of it. You're early adopters leading the charge. Who can you be helping? Who should you be helping? Who should you be speaking to, and how do they do it?
Yeah, so if you look at what we've been doing at the moment, what we're doing at the moment, what we've been doing for the last couple of years, supporting businesses like DBS, who obviously are a highly regulated bank with lots of customers that's a critical service that we offer a bank like that has to be above board. So obviously, it was supporting tier 1 banks. We've also got a joint venture with Standard Chartered operating out of London, which is called Zodia Markets. And Zodia Markets is servicing the EU and the UK market. And so if you think about the types of businesses that Standard Chartered are and DBS are, they are significant financial institutions. And I think anybody any firm that compares themselves to them or even wishes to be like them needs to get in touch. Obviously, I'd love to speak to as many as possible. We have a lot of people talking to us at the moment, thankfully. Thankfully, everything's going well. But also there is another key vertical that we support, and that is actually fintech, right? So fintech is not just, I'm not speaking specifically about traditional fintech, although that's interesting. They tend to move a bit slower, if I'm honest, having worked in that sector. But actually the payments and services world and the world of super apps. And that is, many of those firms are looking to get involved in crypto. They're operating great businesses, very successful businesses that provide everyday services to their clients. And they're certainly inclined and enthusiastic about adding crypto and digital assets to their services. And that doesn't mean just adding Bitcoin. It means tokenization and all kinds of interesting products and innovations that they're interested in. So I think those key verticals, traditional banks and brokers and super apps and modern fintech, I think are the key areas that find most interest in the services that we offer.
Yeah, definitely. And how should they reach out to you?
Oh, well, we're OSL.com. Of course, we're headquartered in Hong Kong, but we're operating globally. So we're based in Singapore and in the Americas as well. So you won't have any problem finding OSL. Hit me up on LinkedIn, Colm Furlong. Always great to meet new people and to tell them about what we're doing.
I love it when I think when you're as passionate about a subject as you clearly are. It's just a pleasure, isn't it? It's a pleasure talking about it. It's a pleasure doing business with people and spreading the gospel. So I've loved it. I could be talking about this for hours more. It's been a sort of real education just listening to the pair of you spar away through this as well. And it's got me excited finishing up this. Next time we're going to do it as a jam. Steve, you can do you can do backing guitar. You're on lead vocal. You're on lead guitar. I'll sing, and we'll see as round 2 next time out. I've really enjoyed it, guys. Thanks so much for joining us today. It's been an absolute pleasure.
Thanks a million, Toby. Cheers.
Brilliant, Tony.
No
Toby,
problem
thanks
at all.
very much.
No problem at all. And we'll see you soon on the next episode of FinTech Focus TV. Thanks for watching.